Welcome to a members update on October the 23rd, Sunday, after the market closed on the 21st on the Friday, for the members only. So quick recap. There were no Make My Millionaire trades open right now, and until the market gives us a sense of direction, there won't be. See the previous video on the overall market update, which you should be getting via email and on the members page. If not, just look at the Jim Hunt VTA Publications channel on YouTube, and you'll see that there for the overall market update. So no Make My Millionaire trades right now because we have a pretty directionless market, and we want all the odds to be in our favor for that. We want the wind in our sails of the overall market, and right now it's been quite fussy as we approach the presidential election. So picking our battles with that one, understandably, because you don't want to. If you lose one, then you're just going to go back a step. I want to only do those ones when it's a real, what I see as a real sure thing. In terms of shorting the overall market, again, see my previous video on the overall market update. We're not there yet. We're approaching the time when I think the market's going to go lower. Having said that, based on what I said last weekend, I have deployed 1/3 of my allocated money towards shorting this market already, and I did that by buying options on the SPXS. I could spread bet it as well. But the tool I used was a January 2018 expiration date for SPXS, and the strike price of $13. But that varies day to day. You want to make sure you get the best spread as close as possible to the existing price, which is about $12.65. So I've got some money in the game already based on shorting the market. I'll be looking at deploying the next third when I start to see more evidence of downwards action. So that's where I'm at with shorting the market. In terms of some individual trades, as I mentioned last week, I don't really care for this market action. I think it's a very soft market, which is why I haven't been aggressively on the long side. And a word about this, when I talk about individual stocks, what I'm doing here, these are not stock recommendations. Okay, I am letting you look over my shoulder, see my thought processes as I look at individual stocks, to look for the sort of patterns that I teach. They're not stock recommendations. And when it comes to you doing your own trades, as I've said many times before, don't do anything until you've paper traded successfully first. Okay, because you need to develop some kind of patience and discipline and, frankly, maturity involved in, taking some losses here and there and just accepting that, that's just trading. So that needs restating. So let me look at a couple of things that have been going on this week, which are interesting. As you know, I've been monitoring the price of gold. I'm still, as an investment, which is different to trading, still in the gold. It's still a bull market. And what's encouraging from that point of view is how gold took this big drop, which I've been commenting on. But look how it sort of clung to its 200-day, which is a key moving average. And it's reluctant not just to go below that, but it's kind of rising with it. So that's a very encouraging sign for the longer term picture about gold, possibly even from a trading point of view. It's formed a very nice kind of bottom there. If I can pick that up on the weekly chart as well, and you see that there. So definitely it's not getting any lower, definitely starting to turn around. And some of the individual gold miners, as I've been mentioning last week, have bounced off of this 200-day and moving along nicely there. So I'll be keeping an eye on those, but the gold, the metal itself, is actually attractive as a trade right now. Let's also mention the VIXI, because I know some people talk about the VIXI and what it is. What this is basically, if you're betting on the VIXI, you're betting on volatility. It's a measure of how many short positions, put options, basically, people have bought on the S&P 500, the overall stock market index. So as you can see right now, this is a very low level, and that means there's a lot of complacency in the market, and there's no demand for people getting this insurance, which I think is very remiss and silly and complacent of the market right now. But it's been like that for a long time, and it's just hit a new low just now on this daily chart. But this is a very short-sighted market, and if there's a big surprise like Trump winning the election, you'll soon see things like this change pretty quick. If nothing else, after the election's out the way, there's a lot of uncertainty going on, and the VIX doesn't stay at these levels for long. However, having said that, I realise it's very frustrating to have been in it. Say you had, I hadn't recommended this, but say you had been in the VIX all this time, it can be a long haul, and this has been an unusually long time for the VIX to have stayed so low. And that again goes back to what I said in the overall market overview, is that this is a very artificial market currently, where it's being held down. The establishment wants Hillary Clinton to win, and that means keeping everything out of trouble, no volatility, no market going down until the election is over, and preferably Clinton has won. If she doesn't win, there's going to be hell to pay. So that's another thing. Let me look at I'm not looking at trading these, but they are attractive. Just as some examples here. EPR, this has got a nice level of support there. It's been carved out as it bumps into a rising 200-day. Got good support. We also got one here, PSB, I was looking at. All the similar idea, the ones I'm looking at right now, there's support there about 105 as it bumps into rising 200-day average. Remember what we're looking at doing here, okay? Just to say this again, because I'm not sure it's going in. What we're looking for is scenarios where we're trying to look at the minimum amount of downside with unlimited or a lot more upside, okay? So all I'm looking at here is situations where, look, here's a stock in an uptrend. If I look at the weekly chart, I can show you. Look, this is clearly a stock that's in an uptrend. Both moving averages pointing up. However, it's in a consolidation phase. It's going sideways, and it's carved out support. It's clearly bouncing off of this line here, about 105. So if it goes below that line and closes at, say, 104, I can be out of that and only be down 100 points, okay? But look at the upside I had potentially. It could have been even further than that as this stock marches higher. So you're just betting the odds, It's not always going to work out. You could have a long string of losers, because really what we're doing is just like professional gambling, okay? And the reason why I hesitate when the market is directionless is because what really helps, what increases the odds in your favor even more, is when the market is also backing you. And that's why just lately, things haven't been working out as regularly as normal, is because the market hasn't been cooperating. Which is why I take to the sidelines in such scenarios. There's another one here. It's look at the clear support here. It tries to get down to 27, but then buying comes in, as you can see, and actually on quite high volume in that case there. So there's a stock that looks like it's definitely got some support around 27. Again, an upwards trend. CLC, you can see a common pattern going on here. Strong support here around 60 as it intersects a rising upwards moving average, and CHK slightly different there. This is an upwards, very nice upwards trend actually, and you can see it clearer on the weekly chart. It's an energy company, and you can see the weekly chart. Look at that clear upwards trend, and it's just got above key moving averages. And if that one was to get above, see, I'm looking at the horizontal here. It's like a upwards trending wedge here, above $7 or $8 there, and that looks set to keep on going well. That's in a nice position here. I could set a support. I could set a stop loss here for this one of maybe 580, something like that. But that one's actually quite interesting. And as I showed you, lots of gold miners are making nice consolidation patterns. a favourite stock of mine in terms of just one. I could trade it, but also just a nice stock to own. It's always done well in the past for playing the metals, the precious metals. Is Silver Wheaton, which is a silver royalty company. If gold rises, silver rises pretty much. SLW, and it's carved out nice support there at around 22. It's risen, and a long way off of its moving average there. If you look at the weekly chart of that, it's great. It's clearly an uptrend. It just got ahead of itself, and that's really the whole precious metals complex. It was a very aggressive rally, and it did the right thing and consolidated before looks like moving higher. And that pretty much just sums up the whole. There's the GDX, which is the all the miners you can see went down, got up, and then looks like it's gold will be continuing its rise upwards. So we're not long to go to the election, and then hopefully the market's going to give us some direction, and I can start to get some more trades in. But I'm not just going to trade just for the hell of it, because it's a very soft market right now. And the other thing is, I'm not even finding anything really worth shorting right now. So remember, when it comes to trading, we're playing the odds. If the odds aren't going to be as many of my odds in my favour as possible, why would I trade? So the objective is to minimise risk wherever possible. So that's all for now, and I'll speak to you next week. And don't hesitate to email me any questions. Thank you.